How to profit from swap, how to make money with carry trades, how to make money with roll over. Hi guys, welcome back to the channel. If you are new, please consider subscribing so that you get notified when we post future videos. Like this video, that's the only way to keep me motivated to keep sharing these videos and the knowledge for free. If you're looking to download stuff, Forex robots, indicators, systems and stuff like that, there are links in the description box below. Visit those blogs and see if you cannot find what you're looking for. Then you can always come back and leave a request in the comment section below. I do not ignore people. Sometimes you can make a request and just allow me time to find the thing that you are looking for, and I'll certainly post it on the blogs. Let's get into today's video. So in this video, we're talking about a simple way to make money with a swap. Some people call it roll over, some people call it carry over and stuff like that. But basically, if you are trading, you have seen that most of the time, your broker deducts a certain amount from your account when you carry over a trade to the next day. So basically, this does not exactly apply to people who are scalpers or people who do not carry over their trades to the following day, who are swing traders or position traders. So if a swing trader or position trader, this applies to you, and also scalpers, because the strategy that I'm going to talk about is basically a quick scalp. So you will notice that on most currencies, let's get as an example this one. If you go USD CHF, if you go to specification there, if we scroll down, you see that they already given you all the information that you need for the swaps. Basically, if you are going to be holding positions on USD CHF, whether you are buying or whether it's a buy position or whether it's a sell position, you are going to be charged swap. Basically, at the moment you are actually going to be charged a lot more swap for short positions and less swap for long positions. How swap is calculated, basically, I'll leave you to Google it. There are many videos on YouTube discussing how swap is calculated, and there are many posts online. But if it's not clear for you, then I can always make a video for you. You can leave a request in the comment section below, and I'll try to clarify how swap is calculated. But basically, it's just basically about the interest differences between pairs, between currencies. So there will be a currency with a higher interest rate and a currency with a lower interest rate, and the difference is what results in swap, whether you're going to be paying swap or whether you're going to be paid swap. I'm sure you have woken up some days and you found that you have got positive swap. So this strategy that we are basically going to talk about is basically a swap scalping strategy. So what you want to do is, of course, you want to go through your pairs and look for a pair that probably has a positive swap. Here with GBP USD, at the moment it's all negative swap. Whether you're buying or you're selling it, the moment it crosses over into the next day, you are paying for swap. But if we go to exotics at the moment, if we go to, for example, USD ZAR, USD versus South African Rand, you see that if you are going to hold your positions, your buy positions overnight, there is a swap that is going to be charged from you. But if you are going to be selling it overnight, and overnight we mean just when the clock ticks over to the next day, so it doesn't mean you have to hold it for 10 hours or 20 hours, or that's the basis of this strategy. But if you swap short, you can actually be paid this much. So that's basically the idea between the strategy. This is one pair. If we go to the next pair, let's go to the next pair. This is Euro ZAR. You can see things become interesting. If you hold a position overnight, certainly you're going to be paying swap to the broker. But if you hold a short position overnight, you are going to be paid swap for Euro ZAR. Another pair. So this is basically what you want to do. Just go through your pairs and see which ones have got positive pair of positive swap, which ones have got negative swap. So you find that here we are looking at pairs that have some positive swap for shorts and negative swap for longs. In some instances, I've seen pairs that actually do have both positive. It might be a small amount, but they might be positive both ways. So that's basically, and these things actually change. They fluctuate because it's based on interest rates. So the euro might be having a low interest rate versus the Turkish lira, or the lira might have a lower interest rate, which basically will come and affect the amount of swap. So it's not standard, it changes all the time. So this is what you basically just want to do. You just go through your pairs and look for. So basically most of the exotics that we have, you can see that you are going to hold short in order to be paid swap. So what is going to happen is whatever time the markets flip over to the next day. This is USD Mexican again. There's positive swap on the shorts and negative swap on the longs. So what you can do is, you do not need to hold USD Mexican the whole day in order to benefit from this. What you can do is, you are going to be scalping. So a few minutes before the market ticks over into the next day, what you want to do is, if you notice that there is a short downtrend, there is a downtrend just before the market ticks over, what you want to do is, you then quickly enter your sell trades on the USD Mexican. Basically, if you notice that before the market ticks over into the next day, whatever time frame that you are watching this video from, so I cannot say what time basically the market ticks over, but whatever region you are watching this video from, whatever time it ticks over for you. So when the market ticks over into the next day, maybe 15 minutes before that, you notice that you probably have this short selling there. What you want to do is then quickly rush for your pairs that will pay you to hold short, that will pay you swap for holding short. So that's what you basically want to time it, and you then sell the pair a few minutes before the market ticks over to the next day. You sell the pair. As soon as that is done and you have ticked over into the next day and your swap has been registered, then you can quickly close your position and get out of your position. So this is mostly for scalping, and basically you also need a bigger position for the scalp for all this to make sense. So this is not for people who are hoping to like hold the position for too long. No, you are just going to hold the positions maybe 15 minutes before the market ticks over to the next day, and maybe no longer than 15 minutes after the market ticks over. what you are just aiming is to just use the money that's in your account to generate some interest, this swap. I hope this makes sense, and like this video, leave a comment in the comment section below. Until next time, bye.